traders at Access Bank expect improved market activity today as investors continue to react to this week's bond auction result. Meanwhile, on-the-run bonds are recording improved offers. And we have Chukwunonso Ifejiofor, is a Treasury Team Member at Access Bank. He joins me now for more on the markets. Thank you so much for your time today, Nonso. And let's get into the sentiments we're seeing play out this week.
Okay, thank you. Good morning. Thank you for having me. Monday, we saw the bond auction where the DMO floated about 360 billion that was up for auction. But at the end of the auction, they sold about 333 billion. And we saw stop rates close at 14.9%, 15.75%, 15.8%, and 16.6% respectively for the 2029s, 33s, 38 and 2053 maturities. Post-auction coming into yesterday, the market opened on a very calm note. But as the trading day progressed, we saw activities around the long tenor bond. We saw those papers being picked at 16.58%. On the short end, we saw activities around the 29s, and stop rates closed at 14.2%. However, we didn't see much trades consummated on the short end because of the wide bid-ask spread. We perceive that market activities will continue to gain traction even as the bond auction settlement happens today and as market participants continue to keep a bird's eye view on what's happening in the economy and trading cautiously. However, we do expect a more active trading session today.
Yeah, because I'm going to ask you in terms of comparisons, though, how this current auction compares to previous ones and how you see the trends playing out going forward with auctions.
First, this is the first time we're seeing the long end closing at 16.6%, which is the highest we've seen in possibly the history of the bond auctions. So what market participants are looking at is there will possibly be a further rate increase at future auction, and the TMO too did not sell exactly the same papers. That was exactly the same amounts that was put up that was up for offer. They sold shyly 333 billion. In all, market participants are trading cautiously and looking at what the future holds, even as we wait for more further policy directives from the new CBN lead. Thank you.
Talking about what the future holds, we saw the important data points coming to the market this week, talking about the inflation numbers there. And I'd like you to speak to how you think the market is responding to that and also how traders are positioning ahead for future data points.
Yes, the NBS released the inflation figures this week, and we saw inflation print at 26.72%. That was an increase from 25.8% where it had closed at the last time the stat was released. What we've seen play out in the market is that market is the combination of so many factors. One being the liquidity in the system, two being the sentiment, three being the body language of the Apex Bank as perceived by market participants. It is the combination of all these that comes together to determine where rates will close at, how the market will trade. And so it is not a stand-alone factor. Inflation tells us that, yes, there ought to be a rate hike to match up the increase in the numbers. However, it's not the only factor that speaks to what happens in the market. There are other supporting factors, as I have mentioned, which is the liquidity and then the sentiment of market participants in general.
Yeah, because I'm trying to imagine in terms of the treasury bills, how you're assessing the trends there. And also the likely impact on inflation on the Treasury bills movement and how investors position across the curve.
Yes, so for the inflation market, what we've seen is more interest on the mid-tenor. The investors are taking a very cautious approach. They consider the short end a not very good return for the risks that they are taking, and they consider the long end too risky for them. So what they've done now is to play around the belly of the curve, particularly around the March to May maturities. We've seen that trade around 7%. However, we've seen the spread between the bid and the offer very large because because the sellers are asking for lower rates, and then the buyers need higher rates. So that has sort of widened the spread. But what market participants have done is to find a middle ground, which is the mid-tenor, and we started to see activities around that papers in the market.
Yeah, but finally, I'd like to get your assessment on the activities that we're seeing playing out in the I&E window so far this week, and what you anticipate going forward.
Yes, we saw the NAFEM, which is the new name for the I&E, Nigeria Autonomous Foreign Exchange Market. We saw it close at 848 yesterday. That was an increase of about 68 naira from where it had closed the previous day. What we had seen is that we had seen some market participants trading at higher levels. And if you recall, the NAFEM is always the weighted average of all the trades carried out, of the last 10 trades carried out for a day. So that was why we saw that increase, because some of those rates, some of those increased pricing had actually skewed it. And so the rates closed at 848. We saw the same thing in the, we also saw that play out in the NAFEX market, where we saw the rates close at 771. That was an increase of about 7 naira. And looking at what had happened for some time now, we've not seen the Apex Bank come to intervene. So the expectation is that there should be an intervention in the horizon, and that should help drive those rates down.
All right, thank you so much for that assessment. We're keeping an eye to see whether those interventions actually happen. Chukwunonso Ifejiofor, a Treasury Team Member at Access Bank.